Guess what I brought is backup today. That's the same person I bring is backup every week. My partner in crime. All right. My esteemed co-host, Mr. Doctor.
I know, right?
I know, right? Hey man,
How are you?
what's up?
How you doing?
I'm doing great. You know what I'm saying? I mean, I had to leave our audience. We had to leave our audience last week while we, get these kids up
Yes.
and running and ready to trade forex. How
Yes.
are you doing?
Man, I'm doing awesome. Fabulous. Can't complain at all. Life is
Right. I
awesome.
love it. I love it. Sometimes you be saying that, you be lying. I be like, Douglas, no, he ain't doing all that. But today I believe you.
Yeah,
Yeah.
you know.
Yeah. So, what's been going on?
Not much, we had a great weekend, with the kids, and we did some awesome stuff. My
What you
daughter's
do?
birthday.
Yeah.
Yeah, it was cool. We went out. We actually had her. She had friends over, some of her
Okay.
girlfriends over, so that was cool. She had fun. She
Nice.
had a good time,
I
so
used
that
to
was
do
cool.
that. I used to do that. Like, did she have like a slumber party thing? I used to do that when I was growing up.
Oh yeah.
Yeah, I used to invite all of my friends over and then kick them out. Yeah, that
Um,
was like, cause like I had like so I had the place where, cause we were the only family in my neighborhood that had like HBO and stuff.
okay.
And yeah, we had like all of the, we had the I don't know if you guys remember, but remember when they had the floor model TV with the two turntables at the top? Like my family was like the first family to have that. My brother
Really?
thought he was a DJ. Yeah. So people would come to the house because we had the amenities. You know what I'm saying? And people would come to the house. And let me tell you something. If they said one wrong thing, one
Mm.
wrong, if they did not bow down, they had to go. I would kick them out. And then, of course, my mom would make me, like, not kick them out because, that's rude. Like, you can't invite somebody's kids over and then call all the parents back and be like, all right, come get your kids.
Right, I
So
hear you.
I would pretend to kick them out.
Mm.
Yeah, I wouldn't actually kick them out, but I wanted to. I didn't have that kind of power.
You didn't have that
It
kind of
wasn't my
power?
house. It wasn't my house. You know?
Mm.
It wasn't my house. Like, is your house your daughter's house, or is it your house?
Oh, my house. Of
Right. So,
course.
like, she can't call no shots,
Yes, exactly. She
you
has
know?
no power. I
Same
got the
situation
power.
in mine. I just thought I had power.
Kids always think
And I
that,
threw
don't
my
they?
weight around, which wasn't much.
Kids,
I was a little girl.
kids, children always think that. They think they got the power, but they don't
Yeah,
realize they don't.
I didn't have the power. It's
No,
okay because I got it now. How about that?
that's right.
That's
See,
right.
good
Okay.
time.
So listen, we got some
Yes,
things to talk about, Douglas.
man, we sure do a whole
So,
lot.
so here's the thing. So
Mhm.
your boy,
We,
45,
oh yeah.
them your people.
Oh yeah. Yeah.
So he did not get his wish.
Mm-mm.
He was trying to repeal Obamacare and replace it with Trump's care, but no haps on the crap, shawty. We're not gonna be able to accommodate that.
He just wants his name on the bill. That's all that matters.
I feel like he want to leave his footprint,
He wants
but
to. He needs to figure something else out to do.
yeah,
He needs to definitely figure something else out that will and make a mark with that.
President Obama. That's his whole goal. That's his whole platform. His whole platform basically built off getting rid of affordable care, aka Obama. That's why they called it Obamacare, so they could try to scare people into getting rid of once, like Senator McCain said, once you look at the Trump care, it's no better than Obamacare. So why are we getting rid of something that works better than the proposed plan?
Hmm. Wow. Yeah, it was about the senator out of Hawaii. I mean, this lady's going through kidney cancer treatment. She's going through kidney cancer treatment, and she took the time. She took the time to say, you know what, I'm going to come out and vote for this bill to make sure that so many families that are going through the same thing I'm going through, because she has the best health care because she's in the government. So she's like, I'm gonna come out and vote. I don't, I know I'm going through this treatment of cancer, which is a terrible disease. But she came out and she made sure she put her vote in to make sure that we keep affordable health care. It's just so important. And I mean, I was so proud of her. I mean, I never heard of her before. This was my first time hearing about her. But you know what? You didn't see it on the media. It was tweeted out. On social media, but not on the mainstream media. Nobody talked about it. But she came out and she did her speech and she explained why she needed to make sure that this stuff goes through. Her name is Mazi Hirono, out of Hawaii. So I was very impressed with that. Of course. Mm, yeah. Yeah, I heard about that too. Yeah. Mm, yes. I mean, you guys realize, the federal. I posted on Facebook earlier this week as we were getting ready for this show, because I was on Friday night. Me and my kids, we were watching a show, a movie night, which is we do that, every Friday night. If I'm in town, we just sit down, just chill, and just enjoy, the family. Well, so I had them watch these video called you know, What's Your Health? I mean, yeah, it's on Netflix for people that want to see it. I think it's also on YouTube too. So if you want to kind of watch that, folks, I think you should definitely take a look at that because he exposes, what the health is, what's called. I said, what's your health? What's the health? It exposes, even the American Heart Association, the Susan G. Komen, American Diabetes Association, all these people that folks are donating money to are busy collecting money from all the food companies. I mean, if you go on their website, one thing that the guy was saying too on the video was like, man, you go on the website and they're telling you about how all this bad food like meat and bacon and all this stuff is good for you. All the nasty things that is causing people to get sick. It's so sad that we depending on folks to help, but what they're doing is just getting folks to get into more health issues because the pharmaceutical companies are going to make their money, and that's what is just so sad. So you want to sit down with your family and watch that video. It's not that, I mean, even if it's 10 hours long, you need to watch it and learn. It's a very short video. I mean, it's about an hour and a half, but it will create a family discussion about health. I mean, my daughter, 12 years old, she was like, oh my goodness, I mean, I'm no longer eating any type of meat. She's 12. She's like, I'm done with that. I mean, today we went out to go eat, and she ordered salad, she ordered veggies in her food. I was so proud of her. And my little ones, the 4 and 3, they were like, Daddy, so this is bad, right? This the meat. And I said, yeah. So we all going vegetarian. We're gonna start them young and teaching them the proper way of eating healthy, so they start seeing what it is. Because at the end of the day, when it's all said and done, it's all about educating our children, man, and helping them become better and better. Yep.
So concerned about his health and his well-being, his quality of life, that when even when he was that small, I took him off of all dairy. I took him off of anything that was an animal byproduct. For them candy, and you offer them these sweets, they want them. And so because they would offer him stuff and he would cry out for it and I would say no, they felt like I was being abusive and I wasn't feeding him properly. And I'm like, he's a kid. Of course he wants the candy. Of course he wants the white bread and all of that stuff. And I just refused to give it to him. And people were actually like angry with me because I wouldn't feed him. I wouldn't make him malnutrition like their kids were. Their kids, in my opinion, were actually malnutrition. Okay, my baby was fed very healthy food, and it was
Yes.
I had to say, and Kingsley was, I, maybe I was.
Mm-hmm. Wow.
Amazon is going to take them on us, right? So, me and Douglas had a discussion earlier about Amazon eating our lunch. And yeah, so I'm gonna let Douglas talk about that because we had a conversation. I was like, yeah, they leaving no stone unturned.
They definitely are not. They're not. They are taking over.
Yes.
What they've been doing, folks. I mean, I remember when I published my book on Amazon. One thing that I realized that they did was I saw somebody else selling my book for like $2,000. I'm like,
Wow.
wait a minute, 2 grand? Who's gonna buy that? But then I
Right.
sat back down and said, how come I didn't, know about this? Why is Amazon even allowing these people to do that? You know
Well,
who
not
they?
only did you not know about it, but did they pay you for it?
No, I didn't get nothing out of that. And
Yeah.
but you know who wrote the book. I mean, because I have an account with you. Why would you let somebody else sell my book on your website?
Right.
That don't even make
So,
any type of sense.
so somebody sold my book
Mm.
for $777, and I
Wow.
didn't see a dime of that money.
Wow.
And I had taken my book out of print because I was doing some things to it. I wanted to make it, nicer and add some things. I was coming out with a second edition. And baby, don't you know, somebody went on Amazon and snatched that work up. Honey,
Mm.
my copyrighted work. Y'all don't hear me. My copyrighted work. And they sold that mug for $777. And I was just so, and they actually sold it for that amount. Y'all, they actually got that amount of money in their hand for my book now.
Wow. Mm. Yep. Wow. Wow. No, I've not been to the Amazon store yet, but you know what? That I see why those service people are concerned because I remember about a few months ago I put in a charging station in my garage at my house, and I ordered it off of Amazon. And as soon as I was about to check out. They say, "Hey, wait a minute. By the way, you need somebody to help you install that stuff. You need an electrician." Because I was going to, go back and find an electrician to get that job done. They said, "Oh no, we got you covered. We got you. We got an electrician right here for you. And this is how much it's going to cost you. And just go ahead and take care of it real quick. And we set the appointment and everything. And boom, they set the appointment, and man, the guy showed up on Tuesday and got that stuff installed. I mean, I can I mean, I can't. It's just that you know what? They're killing the small business owners that out there. That's why, man, you gotta keep changing. Yeah. So you gotta start. You gotta start moving with the world, man. Things are changing and changing fast. So you gotta, for those of you that are in the service business, man, go on Amazon and sign up. Hey, if you can't beat them, join them, right? Go sign up. Yeah, join them. I mean, go sign up and become a vendor with them, so you can, if somebody puts in your zip code and they need a service that they need to take care of. I mean, tires. I was looking on Amazon. You could get your tires installed. 4 tires for like $98. I'm like, man, are you serious? Yeah, yeah. Go buy that book. That's right. Oh, sell it. I know. They are crazy, man. That's the craziest thing I've never seen before. But you know what? They're doing it. They're doing it, folks. So we gotta make sure, you know, I mean, something gotta happen about that because there's a lot of authors out there, man. You write a book and the next thing somebody's selling your book on Amazon, they need to cut that out. I mean, hmm yes, right. Yes, yes, that's true. Right. That's right. That's right. Definitely, definitely. I like that. That's a great idea. I mean, people actually, or because my book is also my book website called Creating Generational Wealth.info. So a lot of folks actually go on there and they purchase the book because whenever they get it from there, they actually get a signed, a signature part of it. So I get to sign it for them and all that good stuff. So and you could order bulk as well for because I've had a bunch of schools, universities actually order my book in bulk and people doing family reunions, some financial advisors actually order my book to use it for to train their agents and teach them how to, some of the things I talk about in creating generational wealth. So there's a lot of benefits, but folks, I mean, life is all about constantly supporting those that are making it work. Again, there's a lot of small business owners out there that if they don't step their game up, Amazon is going to definitely take over and take your business. Just like they've shut down when Amazon came in, they shut down a lot of the bookstores. You know, so folks, it's just what it is. But it's all good. Yes, creating generational wealth dot info. Creating generational wealth dot info. That's right. Yes. Mm. Yes, folks, that's our first part of the show. So we're about to get started again in a few more minutes. We're gonna go in there, but I'm gonna share some slides with you once we get started. So make sure you join in on that. Taking a quick break, so definitely be ready. So I'm just excited. Today is a great day, folks. It's awesome. So we'll keep it here real quick. Just keep on, you know, listening to the show and the commercials. I'll be right back.
This is on Beyond the Bell, Tuesday, August 1st, 4 p.m. to 8 p.m. For more information, visit beyondthebellkids.org.
WAEC is America's inspirational talk station, the longest running religious talk radio station.
This is the National Health Alert from the 24/7 Diabetic Health Hotline. If you, a family member, or loved one has diabetes, listen closely. Now, regardless of your age, if you have insurance, you may qualify to receive diabetic testing supplies with little to no out-of-pocket cost. Get free delivery, free information, and all the paperwork is handled by our accredited suppliers for free. Call the 24/7 Diabetic Health Hotline now for details. But wait, there's more. If you call right now, you could get a free meter upgrade. In addition, we'll give you a free pedometer as our special gift to you. We have feedback and other braces available, as well as pharmacy services. Regardless of your age, if you suffer with diabetes and you have insurance, we can help. 800-590-1164. 800-590-1164. 800-590-1164. That's 800-590-1164.
You are now tuned in to Rich Girl Radio, Love 860 AM, 7 to 9 p.m. Sunday. Money doesn't solve financial problems. I do. I do. I do. Money doesn't solve financial problems. I do. I do.
You like that logo? I love it. It's great. Yeah. I know, right? Yes. Yes. Mm. Yes. Man, I have to do that, because when it's all said and done, they don't like it. Man. Yes. Mhm. Yes. Yes. They sure did. Yep. You do not. You cannot. You shouldn't do that, because that's so crazy. You know what? For those people that are on Facebook Live and on YouTube watching this show right now, I actually have a PowerPoint open, and I did this earlier actually, where I was asking them a few questions. A true or false question is a large down payment will save you more money over time than a small down payment. What you say? You could chat on there, folks, and say yes or no. A 15-year mortgage will save you more money over time than a 30-year mortgage. What you say? Yeah, people making extra principal payments saves you money. See, that's some of the things that people have heard. Make extra payments on your mortgage. The interest rate is the main factor in determining the cost of a mortgage. You are more secure having your house paid off. I mean, paid off than financed 100%. So here's the answer to that. The first one is a false, folks. It's false. A large down payment will save you more money over time than a small down payment. That's not true. A 15-year mortgage will save you more money over time than a 30-year mortgage. That's false, folks. Making extra principal payments saves you more money over time. That's false. The interest rate is the main factor in determining the cost of your mortgage, folks. That's false. You are more secure having your house paid off than financed 100%. See? False, folks. That's another myth that we just broke, because at the end of the day, people are making those financial decisions but transferring their wealth away to the banks, to the financial institution. Go ahead. Yes. Yes. That's right. Mhm. Mhm. Right.
That's gonna make, so if it's $10, if your mortgage payment is $10 cheaper for every, what is it, 10,000? $10 cheaper for every 10,000. Is that how it goes?
Mhm.
Something like that. So that means if I mean, that sounds like I'm not paying very much every month if I done brought my $100,000 house down to $50,000. So that feels like a savings to me. So explain yourself.
So wait. So you saying, say that again?
So listen, I got a
Yes.
$100,000 house I want to buy,
Right.
and I could put down on a conventional mortgage. I got decent credit, right?
Mhm.
I got decent credit, and so I could put down 10%, 20%, but I'm gonna choose to put down 50% and
Okay.
bring my mortgage down to $50,000.
Right.
So what I'm told by my mortgage lender is that for every $10,000,
Right.
I save, I think it's $100 a month or something like that.
Mhm.
So to me, that feels like I'm gonna have a lower monthly payment for my household, for my home, for my
Because you're
mortgage.
putting down 50,000.
Right.
Okay.
So that's it. That sounds like a savings to me. That
It's
sounds like, it's gonna save me more
so
money.
so here's the question to you. Once you put that 50,000 on that mortgage, how easy is it for you to get that money?
Like the equity.
That 50,000, how easy is it for you to get it? Are you making interest on that 50,000?
Well, I mean, if you count my house appreciating, I mean, I'm thinking that over time,
Over
my house is
time.
gonna,
That's the
yeah.
key word right there. Over time. And your house is going to appreciate just like your next door neighbor that didn't put $50,000 down. He financed his house 100%. Both of his house is going to appreciate the same way.
But
So
my
my
monthly
my
payment is
answer to
cheaper than
you
his, ain't
is,
it?
huh?
Ain't my monthly payment cheaper than his, than the neighbor?
Yeah, your monthly payment is cheaper, but you know what you should have done?
What?
Is you should have found a house that you can afford to give you that. Instead, that's what you could have done. Instead of putting
Okay.
down that 50,000 because you want to reduce your monthly payment, all you did was just give the bank $50,000 of your money. That if you put that, man, don't let me bring out my time value of money calculator. If you compound interest on that $50,000, you know how much money you would have made, but you lost it. That's what we call opportunity cost.
Oh. Okay. So let me ask you another question,
Hmm.
because I see here, and stop me if I'm interrupting what you had to
No,
say
go ahead.
with these questions. So a 15-year mortgage is going to save me money over time, more money over time than a 30-year mortgage. So again, because
Yes.
here's the thing, because I got a graphic that I want to put up too, and it's that picture. You seen that picture of Dave Chappelle with the crown on, and he clutching the money to
Yes.
his chest. So when I talk to people about making any type of monthly payment,
Mhm.
that's what they look like. They recoil and they clutch the money to their chest because they're monthly payment or
Mhm.
bill sensitive, right? And
Yes.
so a lot of this myth is based on I'm so scared that my bill is going to be more than whatever amount of dollars. And so
Right.
affordability. So what you're saying about the first question, a large down payment will save you more money over time than a small down payment. And I'm wanting to put down my $50,000 so that I
Mhm.
can save on my monthly payment. And what you're advising me, well, one thing you said is buy houses I can afford. But the other
Right.
thing I think that you were pointing to that you didn't actually come out and say is that that um, there's this myth about saving money. If you don't invest that money, you're not likely to save it. You're more likely to spend it or dispose of it.
Exactly.
So there's that. The other side of that coin is, do you really want to pay the house off? Is that your goal, to pay the house off? A lot of people dream of the day when they don't have to pay for where they live, right?
Right.
So a lot of this is a false sense of affordability. Because like you
Exactly.
mentioned, if you take that 50,000 and invest it and turn it into a couple of $100,000 over, you know, less than half the time it's gonna take you to pay off the house, if that's your goal, then which would you rather have? I would rather have the money.
Yep.
So
I
then when we
agree.
look at a 15-year mortgage versus a 30-year mortgage, the same question comes to my mind. Well, if I'm looking at it from the standpoint of a monthly payment, then yeah, I'm talking about affordability. But if I'm looking at it from the standpoint of an investor who is looking to grow their wealth,
Mhm.
then a 15-year mortgage makes no sense. As a matter of fact, a 30-year mortgage don't make no sense. I'm gonna go out and get me a 40-year mortgage. If I could do it, I'm gonna find me a 50-year interest only.
Exactly. I mean, you know, so many people are so in a hurry to pay their mortgage off. It doesn't. I don't understand why, but you know what? Because they feel they're in debt, and that's why. You know, the only debt you actually have on a mortgage is the monthly obligation, the monthly payment, because that mortgage is actually collateral. The bank gave you their money so you could buy your house, and they used your house as collateral to give you the money. Now, when you finance your mortgage for 15 years instead of a 30-year loan, guess what you're doing? First of all, you're paying more money out of pocket and you're transferring your wealth away. So if your 15-year mortgage is $2,000 and a 30-year mortgage is $1,000, my thing is, why not take that $1,000 and invest it in an account that's growing for you instead of giving it to the bank? Because 15 years is gonna come, and once it gets there, guess what you've just done? Yes, your house is paid off, but guess what you did? You also just lost the tax, your only tax deduction that you have. That goes away. The interest
Wow.
that you are deducting every year, and you lost that. But a 30-year person continues to benefit from that interest deduction every year, and they keep it moving.
So can we talk about the elephant in the room?
Yeah.
Because it's big and it's fat. So, and my friend looked at me like, I know you ain't talking about me.
Oh no.
My friend, she looked up at me like, who you? What you? She was about to fight me, y'all. And they can still see you. So you see, Nikki, you look at the live feed, they can still see you in the corner right there. So you ain't hiding, boo. You might as well go and sit on up. But anyway, let's talk about the elephant in the room. And I'm not talking about my friend. So the elephant in the room is the fact that you have to. So people, they talk about equity, 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 equity. My
Right.
house is going to appreciate. Equity, equity, equity. And I'm going to give a little story to demonstrate and illustrate what I'm about to say. So back in the day when I was doing mortgages, of course, the very first people that I started off with was family members of mine. I
Mm.
happen to be one of those people who my family really, really trusts me. They trust me with their life. They'll follow me into a burning building. They love me to life because I've
Nice.
never steered them wrong. Um, but in this particular case, I was a very new mortgage broker,
Right.
and the very first deal I did was my mother. Refinanced her house. She pulled her equity out. Her husband happened to have great credit. All right. Then it came to me working with my cousin. My mother at the time was in her 60s.
Mhm.
And so, when you're 60 years old, you got good credit. She had good credit, her and her husband both. So
Right.
here I am. I'm going to work with my cousin. My cousin and her husband had been in their condo for several years, had built some equity, and wanted to buy a big old house, big old house. It wasn't quite a mansion, but it was a big behind house, right?
Mhm.
And they qualified by the skin of their teeth. It
Wow.
wasn't a credit issue. It was more of an income issue. And this
Okay.
is something that I talk about a lot because I believe that your your household income or your household expenses should not exceed any more than 25% of your total income. So if you're making $100 a month, your total, all of your living expenses should be no more than $25. Just to make it simple. Okay?
Mhm.
They allowed my cousin and her husband to go up to 64% because of their great
Wow.
credit. 64% debt to income ratio on just the mortgage. Okay.
Mm.
Okay. Just
Wow.
the mortgage. So, but they couldn't find a buyer for their condo. So they
Okay.
were making, that's why they needed the 64% because this mortgage company really wanted to close them. And they did. So they had two mortgage payments they were making. They couldn't find a buyer, couldn't find a renter, right? And what ended up happening is they had to get a bridge loan. So now they have three mortgages. So
Mm.
they had to get a bridge loan to have monthly, to have a down payment, right? Now, so they don't have a buyer, they don't have a renter, they have three mortgages, and I forgot what happened, but there was some type of financial shortfall, which a very slight financial shortfall threw them into financial ruin because they had taken on all of this extra debt.
Wow.
Okay, so I mean, they wanted to pull the equity out of their condo. They
Mm.
had plenty of equity in their condo. They thought, oh, we'll pull the equity out of our condo to catch up. Guess what? They didn't qualify.
Wow.
Their credit was shot all the way to hell and back.
Yep.
They were 64 plus percent on their debt to income ratio.
Mm.
And so their equity languished until the condo went into foreclosure.
Wow.
Yeah.
Mm.
So here's the other thing about putting all that money into a house. You got to qualify to get it out.
You got to. You got to. You got to, and that's why I'm just, I can't believe people are still falling for the okey doke.
Yeah.
And like I shared, I say experience is the best teacher, but other people's experience is the best way to learn. Because personal experience is the worst way to learn because you're gonna feel the pain. You're gonna feel
Yeah.
that pain. So I'd rather learn from other people's experience and just say, you know what, I'm not gonna go that route. I mean, you don't have to have stuff happen to you 20 times before you figure out, man, it's wrong. I just need to see it happen to one person. In this case of mortgages, in 2008, it happened to a whole lot of people. I know
Right.
someone that put down, just like the example you were giving with the 50 grand. Somebody put down, they sold the house, got out $300,000, and they took that 300 grand and put in a new mortgage because they wanted their mortgage to be $100,000 mortgage. And guess what? The market tanked and they lost
Wow.
all that money.
So okay. So this is a WWDD moment. Y'all know what WWD is? Hey, Enrique. You know what I mean when I say WWDD? You know what I'm talking about when I say that?
No, what is
WWDD. What would Douglas do? I love Enrique. I love you. I love you. What would Douglas do? What would Douglas do? Douglas.
what would I do
If
in that?
you had, if you
Yes,
had, let's say you woke up tomorrow and you got some kind of message, a text, an email, a phone call, and they
yes.
said, "Ooh, you got, $600,000 equity in your house, right?"
Mm,
What would you do? What would you do?
I'll refinance that baby. Take
Okay,
as much money that I can take out.
Right.
and just put it somewhere that I know is safe, secure, and gives me access and give me control, and it continues to earn compounding interest. And it has to be an account that I cannot lose any money from. Nothing. Can't lose a dollar.
Right. Right.
So what kind of account would that be?
Yes, Douglas. What kind of account would that
You
be?
got to set up a one-on-one appointment so we could let you know that.
Oh man,
Yeah,
Douglas gonna leave us hanging. Okay,
you
fair
know.
enough. Fair enough, y'all. Hey, Douglas, give them your
Yes.
phone number so they can set up that one-on-one appointment with you.
301-220-3555.
All right. You know what? So here is another WWDD moment. What would Dr. Don Fonte do? Okay.
Yes.
So, here's my thing. I'm not interested at all in financing a house. Not even a little bit. I don't see anything, I don't see any benefit, in doing that.
Right.
Even in my real estate business, I live in this world where, like Douglas, I like control. I like to be able to get in and get out quick. I want to get in, get my money, and get out as quickly as possible.
That's
And
right.
the acquisitions that I'm currently making don't have anything to do with buying, flipping, none of that. you know, I like my money long, easy, and fast. And so I'm just not interested in going through the process of getting a mortgage. Now, one day I'm gonna buy me an island. Okay.
Mhm.
One day I'm gonna buy me an island, and
That's
that might
great.
be a different story. But at the present time in my life, the way I see things and just how I move financially, I'm just not interested in doing that. I don't. One day it may be that may interest me, but because I'm able to do so much more without having to go through getting a mortgage and all of that. I'm able to make money without all of that. I just have decided that that's really not important to me at the moment. Now that may change. That may
Mhm.
change. See, the real estate market has bounced back, and a lot of y'all thought, oh, well, the real estate market done bounced back, so it's time to buy a house. Absolutely not.
Mhm.
Millionaires and billionaires are made in recessions, babies. Okay. So, maybe the next market correction, the next real estate market downturn, you might catch me talking about getting a mortgage, but not right now.
I
So,
mean, yeah. I mean, you could get a house that you want to live in, not to become a real estate investor.
well, that's all I'm trying to do is make money. Hey, I got places to live. Trust me, several. Okay,
Right.
I can pick one. Right now, I got about 7 or 8 different places that I can pick. So I'm good on, a place to live. I mean, I think right now at this period in my life, I don't have any kids. It's just me. And
Yep.
so I am in a position where I can live an extremely unorthodox lifestyle
Right.
and I can do things financially that if I had children and if I had a spouse and all of that kind of stuff, I wouldn't be able to do it. But I'm taking advantage of this time in my life
Yep.
because I recognize it for what it is. Listen, I have a lot of clarity right now, a lot of clarity. And what I know is that I'm in a really, really unique position that allows me to move in ways that most people, one, cannot because either they're uncomfortable with it or they just don't know about it. And so, I think purchasing a home to live in is a great thing, but it's not an investment.
No, it's
Okay,
not.
it is not an asset. That's a purchase. And I want people to understand the difference between purchasing a home and being an investor. There's a major difference.
Big difference. You know,
Yeah.
and but I mean, people just gotta continually learn and figure stuff out because when it's all said and done, you gotta put yourself in a position of power, and that's what I always preach. And you gotta do that, because one thing that the mortgage company and the banks they do is they have so many programs. They got 15-year mortgage, negative amortization, 30-year mortgages, ARMs, interest only, rate options. I mean, they have so many of that. Now, they also, we say your house is probably the largest personal investment you will make. How you decide to pay for it can create unnecessary wealth transfer. Folks, that is so, so true because you just don't know. So the banks, the reason they have so many different programs, because guess what? When it's all said and done, they want to make sure that they're in a position to benefit them, and different programs benefits them. So that's why they make sure that they have all the different ones out there, and all you got to do is pick one. And some programs they make a lot of money, some they do not. That's why I always say, man, if you finance the longest term possible.
Right.
30-year mortgage. If they have a 40-year, I'm doing that.
I'm
50-year,
doing a
I'm
50
doing
year.
that.
What you know about them balloon payments, Doug?
Man,
what you know about them balloon payments?
that I need to stay away from it.
I know that's right. Yes, auntie.
I
Yeah,
stay away from that baby.
yeah. Stay away from them balloon payments. I know, they'll dupe you into thinking, oh, you'll pay it off before the. No, you won't. So
Mm-mm.
the mortgage company makes sure of it. So
Now,
talk to me about the negative amortization financing option.
man, I don't do mortgages, so I don't know what the heck that is. I stay away
Oh,
from that. The two that I kind of like a little bit is a 30-year mortgage and the interest only.
okay. Let's talk about the
So
interest
the
only.
interest only, man, folks, a lot of people jumped into that. Again, it's not for you that you already struggling with making mortgage payment. You struggling already. You don't need to jump into interest only if you cannot figure that out. Interest only is designed for folks that got some money, some dollars. They understand the power of equity. So this is what, because your house is going to appreciate regardless if you put in principal or you put in interest. If you pay an interest only, that's okay, because guess what? You're deducting that interest anyway. But at the same time, when that property appreciate, guess what people like me do? I refinance that house and pull that equity out quickly.
Now, what do you do with the equity? Because I think that's important. See,
I
a
put
lot of
it
people go
away.
shopping with their equity.
I put it away. I don't put it in another mortgage for what? I finance and I keep it. I put it in an account that is building me compounding interest for my future. That's
So,
where I put it.
okay, so I'm gonna get a interest only loan, okay, and I can write off the interest on my taxes. So there's the appeal of that.
Yep.
The house is gonna appreciate, and that's gonna be cool. Meanwhile, I have the right type of credit management system is what I'm gonna call it, and so my credit is good enough that when I am ready to get that equity, I'm in position to do so.
Yep.
So I go down to the bank and I talk to the people, and they're gonna go ahead and let me refi. What
Yes.
what am I doing with my money, Douglas? Why you being so coy? Other than trading it in forex, what else am I doing?
So you gotta first of all, you gotta put it in somewhere that you could, you know, that is safe, secure. Because you don't want to take that money and go gamble with it. Definitely not.
So I
But you
can't go
want
buy me no red bottom.
no. You
Oh,
want to put it where it's gonna help you. Keep it where it's gonna be safe. It's gonna be earning compounding interest, making you money. At the same time, that way you can never lose it. But most
okay.
importantly, you know, don't put it in another mortgage. Don't do that. I mean, don't put it in the stock market. Definitely don't do that. Do not. That's crazy. That's
Okay.
risk. Put it somewhere safe and secure. And but you got to sit down with someone that understands, that can show you how to do it properly. So it's a conversation that it's not a radio show conversation, but it's a conversation that we kind of have to have one on one privately and be able to help you structure properly.
Well, Rike has a question.
Yes.
So how do I do that, Douglas?
Set up an appointment. 301
Where do I set up the
220
appointment?
3555.
What's the number again, Douglas?
301 220 3555.
Okay. Oh my God, we have asked Douglas this same question in 10 different ways. He's like, nah. Douglas is like, set up an appointment. I've been telling y'all on this show for months. Set up an appointment.
That's what
Okay,
you need to
cool.
do.
So listen, what we're gonna do is we're gonna take a little breaky break. I'm gonna come back and talk about some stuff that's been going down in the forex market. We had a big sell-off on
Nice.
Euro USD last week. And then we're going to come back, and Douglas is going to talk about this reverse mortgage situation. Yes. All
Yes.
right? We will be back. You know, been together for some time, and I've been filling with some potholes, filling the space and rearranging for the better. And I hope that you've been feeling the same way. And pray that it's funny to you. Hey, what do you have? Dad, I'm really afraid of what's happening in the economy. Too much civil unrest, too much terrorism, and unstable global markets. I'm tired of riding the ups and downs of the market. It reminds me of 2008. I was caught off guard then. How do I prepare for the worst now? What do I do if the dollar collapses? You gotta stop worrying, son, and take action. It's time to think about a precious metals private storage IRA or an investment in silver with the Gold Silver Group. Like I said before, you insure your house, your car, your kids, and your life. Don't you think it's time to insure your wealth? Call Gold Silver Group at 800-943-0834. Learn how easy it is to set up your own precious metals private storage IRA and how you can qualify for up to $700 in free silver. Gold Silver Group can satisfy any of your precious metals. You got a doggone 1-888 number. Silver fully insured and privately delivered to your door. Call Gold Silver Group. 800-943-0834. 800-943-0834. Tune your radio. Tune in now. You can tune in to this radio station on any smartphone or tablet. iPhone, Android, BlackBerry, Nokia, Samsung, Windows Phone, or whatever you have. Download the free TuneIn app from your phone or tablet. All right, tune in with music, sports, news, and comedy from over 70 radio stations around the world, including this weekly broadcast station. Check it out at TuneIn.com or your app store. There's a lot going on in the world, and your world is always changing. That's why it's important to stay connected. The latest news, the latest entertainment, the newest music. If it's in the air or on the air, it can be in the palm of your hand, wherever you are, with the iHeartRadio app. iHeartRadio. Over 1,500 live radio stations from across the country, and over 15 million songs to create your own custom station. Text IHR to 45495 to download the app or listen at iHeartRadio.com. Standard text and data rates apply. I know there's no one. Okay, stop. You are now tuned in to Rich Girl Radio. Money doesn't solve financial problems. I do. Love, 8:60 a.m. 7 to 9 p.m. Monday. Hello, ladies and gentlemen. We are black. Hey, give us a call. 404-355-8699. Let's get into this conversation because Douglas over here acting all coy. He said y'all need to set up an appointment with him. He is not giving away no more free information. Y'all around here dilly-dallying, don't want to take the man advice. He giving y'all good advice every single Sunday right here on the show, and y'all playing, okay? So guess what you're going to have to do? You're going to have to make a little bit more of an effort, and you're going to have to go to www.largofinancialservices.com, and you got to give him a call, okay?
Right.
Listen, we have a caller on the line. Let's call her real quick, and then we're going to get into this conversation about the reverse mortgage. Caller, what's your name, where you calling from, and what can I do for you?
Good evening, everybody. This is Avery. I'm calling from Southeast Atlanta.
Hey, Avery, what's up, man?
You take me way back to the Kwame, huh?
All right. Hey.
Yeah, but anyway, reason why I called because the situation you said about 2008, 53% of all homeowners lost their houses because of the market. But anyway, I know two couples that have it affected them personally. And the first couple, man and wife, no children. The man makes $100,000. The wife makes $80,000. $180,000 in the household, and they lost their home.
Wow.
And the reason why they lost their home because in both of these couples, they didn't have a budget, a financial plan. You should know where your money is going. And I asked him, I said, what are y'all doing with your money? I mean, you're making good money, making more money than I could possibly imagine in 1 year. You're making just about 6 figures. And I'm saying, you don't have any children. What are you doing with your money? You know, it doesn't make sense if you get this, you work hard to get this home, um, and you can't pay for it, and you don't have any children because children, they call it money to feed children, mouths to feed. You don't have any mouths to feed, right? So why are you behind the 8 ball? And I just didn't understand it. And then what really burns me up when I hear people talk about get more house than they can afford. I'm like, excuse me, you got to pay the taxes. There's no such thing as getting more house than you can afford. That doesn't make any sense. That's not the logic. I say you forgot about those taxes. You forgot about the interest. A lot of people don't even know the interest rate to their homes, whether they got a 50-year mortgage or a 30-year mortgage.
Right. Yeah. I mean, here's the thing. Thank you, Avery. Here's the thing. You're absolutely right. You have to put yourself in a position to win. Even if you have a great house, even if you have a great mortgage vehicle with a wonderfully low interest rate and all of that, Avery, it's like, what are you going to do with that money that you're so-called saving? All right? What are you going to do with it? Is it mattress money? Are you going to invest it? Are you going to spend it? What are you going to do with it? That's really important. Douglas, I am on I'm on your Facebook page, and I see you got another quiz situation going on.
Yes.
And I mean, Douglas gonna take you out of school, honey. I mean, this man, he he gonna take you out of school. That's all right, cause y'all gonna learn today. I said it, and he putting that thing into action. So listen, is your house your largest asset? Is it? Is it, Douglas? Tell us.
No, it's not.
No. What's the largest asset?
Let's keep asking the question. Let's see what the people. I want the people to respond because I mean, I'm the teacher.
Okay.
People need to answer the question.
Okay. All right.
Do you ever?
301-220-3555. 301-220-3555. LargoFinancialServices.com. Y'all get it. Call the show 404-355-8699.
So the other question is, do you ever plan to sell your house? Do you ever see yourself needing access to your home equity? So this is the question we'll be asking folks, especially our seniors and folks that have money sitting in their mortgage. They've paid off their house, it's just sitting there. They're house rich, retirement poor.
Okay.
Is living a paid off house to your heirs a primary objective? Do you
ever see yourself needing access to your home equity? Good question.
Yep. Do you see one of your heirs living in the house? That means, do you see your children living in your house? Is making mortgage payments during retirement a concern? Those are questions that I like asking folks so that I kind of see where their mindset is to see how it is that we can help them. So
listen.
Yes.
If I call your phone number 301-220-3555, and I set up an appointment with you.
Yeah.
Are we gonna go through this quiz?
Oh yeah, definitely. We're gonna go through a whole bunch of stuff because I don't want to just sit down. I need to educate you. See, what I do is I take you to work. I take you to a school. So I want you to be empowered. It ain't just about sitting down and just selling you a product. I want you to be financially empowered so that 5 years from now, 10 years from now, if I'm not around, guess what? You know exactly why you did what you did.
I need you to write another book because I mean I can't be coming to your office sitting down with you every time I make 10 cents. So you tell me what to do.
Well, you got to. I mean, at the end of the day, you can only put but so much in a book.
Right.
But at the end of the day, our folks just need to realize, you got to be able to sit down, understand why you're putting money in an account. Why are you investing in this stuff? Why are you doing certain things?
Because the TV had said it was the American dream, Douglas. That's
Yeah,
what they had said.
it sure has. It sure has.
So I mean, that's why it's the American dream.
It is. So another thing that I do, and I'm going into the reverse mortgage. This is, because so many people are confused about that. So basically, some of the things that I kind of ask is, if there was a product that would offer you a home equity line of at least 50% of the value of your house,
Okay.
equity line can only increase regardless of changes to your property value.
Oh, wow.
No monthly payments required on any withdrawals. No settlement required until you sell, die, or move.
So wait a minute. Start over. Start over. Because I think. Hold on. So let's talk about. We talking about the reverse mortgage, you guys.
Right.
And this is some really interesting information. Now, I know that just like a lot of things that we talk about on the show, because I don't know. I feel like for a lot of, especially Middle America, we've been taught to just play it safe. Like just look, just go to work, put
Yes.
food on the table, and make it safely to death. Don't you
Yep.
do nothing risky. And so what you're offering is another way to utilize the things that you're going to do anyway. You're going to buy a house anyway.
Yes.
Right? So, okay, if you're going to do that because it's the American dream, okay, if you're going to do that, then there's ways to do that that are going to benefit you if you're in a certain situation. But you got to position yourself with the knowledge that you're providing so that you know exactly how to manage the situation.
Exactly.
But I want you to go back over some of those things that you said about the reverse mortgage because I don't think people really, really get it.
Yeah. I mean, first of all, the question is, if there's a product that would offer you all this stuff, a home equity line of at least 50% of the value of your house. That means if you have a house that is worth paid off worth $400,000,
Okay.
and 50% of that value is 200,000. If you have a plan that could give you that, will you take it? And that one is equity line can only increase regardless of changes to your property value. You don't have to make any monthly payment required on any withdrawals that you take out. No settlement required until you sell, die, or move out of that property. All withdrawals are received income tax free. I love tax free, right?
You love tax free.
I
I love
love
tax
tax
free.
free. Interest only interest is only charged on funds used. So if you don't use the funds, they don't charge you interest on it. Now, guess what? This is insured by the Federal Housing Administration. That's a U.S. government agency that has been part of the Department of Housing and Urban Development since 1965.
Wow. So this
Folks,
isn't new.
no, it's not new, folks.
Wow. So, okay.
So the question, would you want this benefit?
Hell yeah. Rika has a question.
Yes.
My question is,
I can hear you, Ricky.
I said you see a lot of these commercials,
Yes.
and they cater toward the senior citizens.
Yes.
My question is, after they pass, what happens
Well,
to
that's
their
an
property?
awesome question. Awesome question. Always remember, the bank don't want your house. So the family members have a time frame to get that house and take it over. So one of the things that we do is this. If I'm sitting down with a client and I'm helping them with a reverse mortgage situation, I help them also set up a life insurance contract that will pay off that mortgage or help the family members buy that property. Because they're going to also, another thing too, the property, the family members could buy the property if they want it at a discounted rate. They get a good price for buying it. And secondly, they could sell it if they want to and pay off the bank. They have the option, but most people don't know that.
Okay, my second question is then, and maybe this is just because I don't know. So when they do the reverse mortgage, is this on a property that has been already paid off, or is it one that they're presently still paying on?
So first they got to be over 60 years, 62 years old. That's the age. And secondly, they have to have equity in that property. Now, if they have equity and they still owe mortgage on it, one of the companies that I use, because I have a number of different companies that I use for, that do it. I don't personally do reverse mortgage because I'm not a mortgage broker, but I do have
Not
relationship.
yet.
But I do have relationship with banks that do it. But one thing that one of our affiliates do is this: they actually have, I mean, well, every reverse mortgage company will do it too. They'll pay off that mortgage first, and then turn it into a reverse mortgage for you.
Wow. So, okay, y'all. All right, 301-220-3555. Call this brother so y'all can get y'all financial situation together. Because that's really that. Okay, so yeah, the power of the combination of the reverse mortgage and the insurance. That's
Oh
pretty
yeah.
key. Pretty
Yes,
key.
it is.
So
I mean,
listen.
they got to add that piece to it because that's the missing piece for so many families. So I'll give you an example. If I have a family, right, an older lady or older man that the house is paid off, they're receiving Social Security. They just say they're receiving, you know, among both of them, $48,000 a year in Social Security. That's like 4 grand a month. And they like, you know what? We don't need this money. We want to leave it for our child, our baby. We want him to have it. Now, my thing is why he don't want the house because he wants the cash. You need to enjoy your life. So why not? You don't need the mortgage money. Your house is paid off. So let's say we refi that property. I mean, do a reverse mortgage. I mean, we do a reverse mortgage on it, and now they could receive income of $2,000 a month or $3,000 a month from it. So in addition to their Social Security check, which was 4 grand plus a 3 grand, now that's $7,000. But they're already comfortable living off of 4 Gs. So what I do is I'll design a life insurance contract for them, maybe $2,000 a month of that. Because remember again, the money they're using to purchase that life insurance. Oh, this is even sweeter. This just hit me too. I just got an aha moment. They're using a tax-free money from the bank, from the mortgage, from the reverse mortgage, $2,000 to put into a tax-free account.
Wow.
So now when they pass away, their children will get tax-free death benefit that they could now decide, okay, we got all this money. Do we want to just pay the mortgage off or sell this house? At least we'll have time because you got at least 6 months or whatever to make a decision what you want to do and buy it. You could buy it out from the bank and get rid of the loan and buy it from the bank and say, okay, here we've taken possession of our parents' house. Now we're gonna have time to decide what we want to do. But they're using tax-free money to make that decision.
Man, I mean, that's pretty cool. That's really really innovative stuff. And we have a segment where we're going to talk about the pros and cons of leaving your children the house. Okay, not
Yes.
going to talk about it right now, but I think it ties in really really well. And so, what I want to do right now is just make sure that I take time to mention some of these forex events that I'm doing
Yes.
coming up. Okay, I want you guys to definitely show up, sign up, and shut up. Okay. Um, I got that from my friend Laban King, who is on his mayoral run to be the 60th mayor of the great city of Atlanta, where I was born and raised. Okay. So thank you, Laban, for that little sound bite because he got the sound bites galore, hunty. So listen, I just left. So last week I was in D.C. and Douglas and I had a great time teaching people about the magic of the foreign exchange market. That's why I wasn't here with you guys last week because we were doing that, educating people and getting people into the foreign exchange market, taking them to the money market, okay? And then yesterday, this past weekend, I was in Memphis, well, no, Jackson, Tennessee, rolling with my girl, Miss Dawn $1 Million Wilson, okay? We went out there and helped these people make some decisions about their life. And my driver, who happens to be in the studio with me, Nikki, who hiding in the corner, but y'all can still see her. She's funny because she's hiding, but she can still be seen, okay? I think she thinks because she can't see y'all, y'all can't see her. It's crazy. So listen, here's what's going on with me. So on Tuesday, August the 8th, I'm going to be in Atlantic Station, and you're going to have to go to my page and go to Eventbrite and sign up and find out the exact location. And on Saturday, the 12th of August, I'm going to be in Charlotte, North Carolina on the 12th and the 13th, actually. On Tuesday, the 15th, I'm going to be back in Atlantic Station. And believe me, you don't want to miss this, but you do have to go and go to my page and sign up and register because y'all be tripping. Y'all want to know all the information and y'all don't do nothing with it when you get it. So I'm making y'all work for it, honey. I'm like Douglas today. You got to call me. All right. And then on Thursday, the 17th of August, I'm going to be at the Buckhead Branch Library from 2:30 to to 5 p.m. And on Thursday, the 31st, I'm going to be back at the Buckhead Branch Library from 5 to 7:30 p.m. And I believe we have not made a solid decision, but I believe the 18th, 19th, and 20th, I'm going to be in Memphis, Tennessee, okay? And I will give you all the deets on that. Plus, got a little bit more for you. Y'all just bear with me. Because on the 31st, which is tomorrow, I'm going to be at the Cascade Business Consortium at 6 p.m. I'm going to be speaking there on Tuesday and Wednesday. The 1st and the 2nd, I'm going to be at the Hope Global Small Business Development Workshop from 6 to 8 p.m. On Tuesday, August 2nd, I'm going to be at the Buckhead Tip Club. Y'all come join me, 7:30 in the morning. You got to be serious about your business if you're getting up be somewhere at 7:30 in the morning. On Thursday, the 3rd, I'm going to be at the Black-Owned Business Roundtable in East Point at 6:30 P to the M, okay? And then on Saturday, the 5th, I'm going to be at the Black Business Saturdays on Cascade Road from 12 to 6 p.m. And on the 10th of August, I'm going to be at the Vision to Wealth event at the Doubletree in Buckhead. Y'all, listen, I ain't playing. Y'all gonna get in this forex, okay? y'all gonna get. I don't care if I got to just be at every single networking event, every speaking engagement. Y'all keep doing this forex, okay? I promise. So you must well. Don't make me have to wrestle you down and kill you, okay? All right, cool. So back to the show. And don't worry, I'll give you those dates again later just to make sure y'all don't forget. And Douglas is cracking up at me because he know I'm serious. I'm on the run, child. I'm trying to do something. I talk to Douglas all the time, and I say stuff like, Douglas, I'm gonna do something really big. And he like, what? And I won't tell him. I ain't telling y'all nothing. I won't tell him. So here is the deal. I see you, Calvin, talking about what about First Fridays. Me and you got to talk about that. We already had one chat. We're gonna talk soon, brother. So let's discuss the benefits of interest-only loans. Now, Douglas has already given his disclaimer, and he has said that he does not do mortgages. However, what Douglas is phenomenal at is making sure that he surrounds himself with the right people to get you into a financial situation that's really going to work for you. You know, you don't have to know everything.
Right.
But when you surround yourself with people who know what they know and you just stay in your lane, you let them stay in theirs, you can really make some things happen for some people, okay? Your network truly is your net worth. All of y'all who be out there, I keep my circle small. Yeah, you keep your money small too, don't you? So anyway, Douglas, can you talk to us about the benefits of an interest-only loan? How can that work for me?
So, like I said earlier, I mean, interest only has been around forever. It's a financial product that a lot of the wealthy families use, and for people that, I mean, you don't have to be super wealthy to use it. You just got to be smart about your money. So, for example, because remember, if you have a mortgage, let's just say, I'll just keep it simple, $100,000 mortgage, all right, and your monthly mortgage payment is $1,000 a month. Out of that money, only $100 of that money is going towards your principal mortgage payment. The other $900 was going towards the interest. Because for the first 15 years, all you're doing in that house is paying the interest anyway. So what people, I mean, $100 going towards your principal payment ain't a whole lot of money. Because the bank want to get their money quickly. So that's okay. I don't mind giving them their money. They need to get it anyway. Because they just give me $100,000 to live in the house that I want to live, right? So check this out. So why not just do interest only on that loan? Now again, I'm using $100,000 example, folks. So don't, it's an example. So here's what you do. You do the 100 interest only on that property or whatever it is. First of all, you're getting your house is going to appreciate. The thing most people always worry, well, I need to pay extra money in there. I need to pay extra principal so I could have my house appreciate. No. If your mortgage payment is $1,000 a month and you put in an additional $500, that's $1,500 a month. All you're doing is taking your hard-earned dollars and putting it into a house that you ain't getting any type of interest rate on. Because that extra $600, that extra $500 plus your $100 principal, that's $600 a month. You're not earning any interest on that. Why not put that in an account that you're going to make money? And I promise you, if that account is the right type of account that gives you a good rate of return, which is the account that I love so much, That extra $500.
The one you won't tell us about.
No, I mean this particular one I could tell you about it because I've talked
Oh,
about it. Your savings, your life insurance savings account. Because again, your $500 is is money that you could be putting and saving. But a lot of people take that and they put in their mortgage, and they're thinking, well, I'm building equity. No, you're not building equity. What you're doing is you're accelerating your payment on your mortgage.
mm,
And if you fall into a financial hardship, there's a financial emergency, you got to go back to the bank to get permission to get that money out.
right.
So my thing is, do the interest only, take your extra money, put somewhere else, let it continue to grow. 5 years, 7 years from now, 8 years from now, if there's equity in the property, keyword, if there's equity in the property, man, what I do is I take my equity out and
So,
use it for something else.
so
Yes.
listen, I have a feeling, I can feel the question burning through Facebook. Please, please explain to these people because you just confused them all to hell. I promise you did. They're trying to understand why it is now it's not building equity for them to pay more on their mortgage for them to make that extra payment
Well,
because we've been. Go ahead, go ahead.
remember, your house is going to appreciate anyway with the neighborhood, with your neighborhood. It doesn't appreciate because you're putting extra money in there. All it's giving you is access, it's extra. You're just paying down on your principal payment. It doesn't change the interest rate you're paying either. All you're doing is you're quickly about to pay off your mortgage so quickly so that the bank can get a hold of your money and take that money and loan to somebody else.
Right.
And then you're in a position of a beggar because now
So,
you don't have no money. You're begging the bank because you have to get money back from them. So my thing is, take your time, put your extra money somewhere else where you're earning compounding interest, not in the walls of your house. It doesn't make any
right.
sense for it to sit in the walls of your house. It's not making you any money. It's like taking the money and putting it under your mattress. That's the same
Yeah.
thing when you put it in your mortgage. Because the banks, they don't, the financial institution, they're looking at your house and looking at the equity just like you looking at it. And also remember this, it's a lot easy for me to sell a house that doesn't have equity than for me to sell a house that has equity. Why? Because the house that has equity, I'm trying to sell it. You're gonna start negotiating with me, wanting me to give you some money down, give you this, give you all that nonsense. I don't want to
Right.
do any of that. But if I don't have any equity in the property, first of all, another thing too, guess what? The banks, they rather foreclose on a property that has equity than a property that there's no equity.
So
So
here's what I want you to address real quick.
yes,
So you talked about making extra payments is not going to help you increase equity. Um, First of all, equity has more to do with your property's value than how much money, extra money you're making on your extra payment you're making on your house.
exactly.
So, and let me just say, let me give my disclaimer. I'm a former mortgage broker. Okay. Uh, and I was one of the ones that was spreading all them lies back in the day. Do forgive, but I was just teaching what I was taught. So here's the thing. Let's say you make that extra payment.
Yes.
Let's say you do it. You make that extra payment every month or every year, however, and you think you're building equity. And lo and behold, somebody decides that they want to make some kind of changes to their property across the street. And because they do that, your property value plummets. You've been making all these extra payments. And your equity, your precious equity, is now going down the drain.
Right.
We see this happening a lot in Atlanta simply because we have a lot of apartment complex, and people think that development automatically means equity. It does not. We're seeing a lot of neighborhoods being shifted and changed. Values are going up and down, and so are property taxes. So
Yes.
if you're making that payment, not realizing that you're not necessarily increasing any equity, But at the same time that you're doing that, there's no guarantee because something can happen in your neighborhood
Yeah,
where your property value actually slips. It's going to be a real, real hard day when you find that out.
exactly. And always remember too, putting extra payment on your house is like you paying cash for the house or making a large down payment on the house. Same thing.
Yeah.
You know, you taking your heart. Remember, folks, time is so valuable, and inflation is also something you got to always look at. The money that you make today, a dollar today and a dollar in the future, are two different things. And the value of a mortgage, $1,000 mortgage payment today and $1,000 mortgage payment 10 years from now are two different things. It, that same $1,000 that you're paying today, 10 years from now, the value of it is like $700. So why are you putting extra money on your house when it's going to devalue the money that you're putting in? Why not put that extra money in an account that you're going to be making money? Because your money got to be working for you every minute. It needs to be working. It needs to be making money, not sit
Right.
in a house where it makes no money.
Right. Yeah. I mean, I agree with you. I think, what I tell people when I do these seminars and workshops, I let people know that money has great work ethic. It's going
It
to be
sure
your
do.
best employer. And what you want is you want to be money's master. You want money to become your obedient servant. Okay? And you like that, don't you?
I like that. That's
Because
good.
Doug was one of them people. Money is his obedient servant. He'd be like, money, come over here, and he'd be like, okay. So he know all about that, right? And which is why we do this show because we want to help you master that. Okay, that's what we really want for you. I know for me, once I kind of like cracked the money code, I was like, oh, I got to tell people about this.
Yep.
But y'all don't want to hear me though. Y'all don't want to hear me though. So I just want to, I want you to make it really, really simple for us, and I want you to do it in the form of a story. Okay, so I got $100,000 house,
Yes.
and I have some options. I want to get this house. I can do it interest only. I can do a reverse mortgage. I can put that money in another account. Tell me, what do I do? I got $50,000. I want to buy $100,000 house. Tell me, what do I do?
You work to the bank and
Okay.
finance the house 100%. If they could give it to you with no down payment, get it. We
Okay.
know with zero down. For those of you VA people, veterans, man, you should be buying properties, man, because you'll have that, what they call it, no money down.
Mhm.
Man, I love that.
Yeah,
Finance
me
that
too.
baby. You know, if you
Other
have to
people's
put
money,
money
right?
down, put the lowest amount required. Finance it. Take your $50,000 and put in an account that you could be making high, an interest rate, decent amount of interest rate, and let it grow for you.
Nice. So listen, um, I promised the people that we were gonna talk about this really touchy subject, and it was kind of
Yes.
brought up by um, Enrique.
Mhm.
um, so I'm, in my 70s. My house got, plenty of equity because I've been doing what I need to do, and I bought in a good neighborhood. And I don't want to go back to work at Walmart. I want some money. I want to travel. There's some things I want to do. There's people I want to
Yes.
help. And so I'm thinking about doing this reverse mortgage situation. But I'm also battling with the idea that I'm supposed to leave this house to my children.
Mm.
Okay, and I'm just gonna tell y'all, I ain't never seen a situation where that has worked out. But I'm gonna let Douglas weigh in on this topic. I think it is pretty touchy, but I think it's something that needs to be talked about. We get real on this show, and so yeah. So Douglas, help us out with that. I'm an older person. I want to leave
Yes.
the house to my kids and enjoy my life, but at the same time, I feel obligated to kind of keep it. But I know that there are other things out there, like the interest only loans, like the home equity lines of credit, like the reverse mortgage. I know that there are these things out there, but I'm afraid that I won't have the home to leave to my children. What do I do?
So the first thing I do is I bring all the children to the house, the people you want to leave the house for, and I sit down and we have a meeting, a family meeting, and I'm gonna ask each of the children. do you want this house? And guess what they're gonna say? No, I got my own house. Man, I leave, you know, I got my own house. I got my own thing I'm doing. Guess what they want? The children want the bread, like you say, cash. They want the money. So you got to enjoy your life. What you need to do is go ahead and get that reverse mortgage and put some money in your pocket. Travel the world. That's extra tax-free $2,000 or whatever amount. Take it and go enjoy life. And then, and then you know what I do too? Because again, the money is going to come to the kids anyway. This is what some of my clients that are, I just put them out real quick. The Indians do. This is what they do. Some of my clients that are Indians, hey, shout out to them. Guess what they do?
Shout out to the Indians.
Yeah, man. This is what they do. They say, Douglas, this is what we're going to, because we're going to inherit that money anyway, right? I say, yes. There's four of us. We're going to put the money, we're going to pay the insurance premium for our parents because they've done everything they can for us. So here's what we're going to do. We can afford to put $1,000 a month each. That's $4,000. How much life insurance can we put on them? I'm like, yes. And we run the numbers for them, and boom, they get the amount of coverage in the millions, right? And they put that on their parents. It's an
Okay.
investment. They know
Okay.
the longer the parents, especially, and I'm not talking about term insurance, folks. I'm talking about cash value life insurance.
Okay.
And guess what? The longer the parent live, because I said to them, now, here's the benefit to this insurance policy. The longer your parents live, the more money you get. They're like, really? I say, yeah. So guess what? Make sure they're eating healthy, feed them properly. They're like, oh yeah.
Send them
And
to the gym.
go to the gym, get healthy eating, and they make sure their parents are eating well because the longer they live, if they're 65, 70 years old, for another 30 years, man, that $1 million policy or $2 million policy we started off with will be worth $5, $7 million.
Wow.
That goes back to the children, tax free.
Do you want a house or do you
You,
want $7 million?
thank you.
You want a house or you want $7 million? You choose.
Mm,
Yeah, I like that. See, and what you're talking about is families who think from a business standpoint. So,
that's right.
part of the reason why I wanted to do the children's foreign exchange event was because I wanted to create a space for parents to be able to talk about money, wealth building with their children. I've said several times, and I'll say it again. Many of us were taught get a good job and pay your bills on time, and that's the extent of money conversation in many households. But what you're introducing is a way for people to sit down and be strategic instead of arguing about who gets what and
Yes.
I was mom's favorite. You can create something that everybody, including the parents, can benefit from while they're alive.
Of course.
You don't have to wait until people die to fight and try to relive all of the old drama through who's gonna get this and who's gonna get that. That is so that what you just said about having everybody come over and having a discussion and saying, listen, do you want the house or you want $7 million?
That's right.
That's a very important conversation to have and a great way to look at it because you don't want to be asking that question when people are grieving.
No.
I was actually speaking to some friends of mine about how well taken care of my aunt was when her husband died. And Dawn, my mentor, Dawn $1 Million Wilson said, yeah, she might have been grieving, but she wasn't mourning because she was all right.
Yes.
She might have been grieving, but she certainly was not mourning because she had everything. There was no financial problems, nowhere on her horizon for no reason. Like, I mean, she's still doing well. That was she died back in 2005, I think, and she's still doing very, very, very well financially. And so he left her in a really good position. And you don't want to add fuel to the fire when you're talking about losing a loved one. You want to, while you're still alive, position yourself and position your family to be able to benefit so that they can pull together in those times instead of ripping the family apart over money.
I mean, I remember in my young age of being an insurance agent, I remember this lady. I mean, God bless her soul. She passed away. Man, she had a nice restaurant, and I go out there and eat all the time. But I was still a rookie in this business, and and I went out and I sold a policy, and it was for like $350,000. And I asked her, "Who do you want to be your beneficiary?" She has 4 kids, and she said, "Well, one of my children already has her own restaurant, so she don't really need the money. So I'm just gonna leave it for these other children." I said, "Okay, what do I know?" I said, "Sure, whatever." And I wrote the plan, and okay, she had a will, you know, and guess what? 2.5 years later, this lady passed away.
Mhm.
Now, guess who she put in place to manage the affairs? The one
Oh,
that she did not put on, that is not the beneficiary on the insurance policy,
of course.
that owned her own restaurant. So that one called me, right, and said, "Hey, I see you're the agent, and I need to look into these policies, blah blah blah." I said, "Oh, what happened?" She told me. I said, "Okay." And she actually called the insurance company too because she saw the policy. But they told her, "Hey, we cannot give you any information on this policy because you're not a beneficiary." She's like, "Well, but I'm the one that they is managing the." They said, "Nope, we need court papers." So then she
Wow.
called me, and I said, "Okay, let me check in." And then I looked, and I'm like, "Holy, she's not the beneficiary. The other kids are getting the money split." Man, she was pissed off.
I'm sure.
She was angry. Guess what? Family problem. They
Of
lost that
course.
restaurant because the other joke, that they left the money for, didn't do anything about it. They couldn't do
Wow.
nothing. So they lost that restaurant. They lost everything on that. And the family was split up because of that. So you just never, it's so important, folks, to have those conversations, have those family meetings, man, because you got to, you know, do that. Talk to your kids, sit down and plan. Planning is so important. We're not going to leave this world alive, so it might as well plan.
Yeah. No one gets out alive, people.
No,
So listen, I'm
yes,
looking. I'm looking at your creating generational wealth page. They can't hear me. They want to hear me.
they can hear you.
They can't hear me. Stephanie Davis Derrick says we can't hear her.
Oh,
Anyway,
well,
now
they
we
can
can hear
hear
her.
me.
She
That's
says,
all that matters.
okay. Oh, that's all that matters. Okay. All right, brother man from the motherland. This is your show today. I've been real, kind of more laid back than I normally am. So listen, Douglas,
Yes.
where are you going to be? What are you going to be doing? What can we expect from you? I'm going to go back over my event dates in just a moment, but I want to know where you're going to be.
Man, I'm here in Maryland for the next few weeks. I got but you could always reach me, and we'll do a webinar. I'm all over the country. We could do webinars and sit down and educate and help your families out. So definitely, you could reach me at 301-220-3555 and set up an appointment with my assistant. She's awesome. She has access to my calendar. Her name is Rashida Jordan. She could definitely work with you and set up an appointment to have a conversation. And I have superstar agents that I've personally trained that know what they're doing, and they can definitely help you too if you're not able to get with me. But for sure, we're gonna work with you first, and then we'll go from there.
Nice. So it looks like we've switched roles
What's
because
that?
because I'm going to be in Charlotte, North Carolina on the
Okay.
12th of August. And then I'm going to be in LA later this month. And then at some point, I'm going to Memphis. All right. And what I'm going to do is post those event dates on
Okay.
my page. I'm also going to post. I'm going to, I got a couple of meetup groups and got a couple of, some different groups that I manage and organize for. But I'm going to be local as well. So on Monday, the 31st, I'm going to be at the Cascade Business Consortium at 6 p.m. And then on Tuesday, the Tuesday and Wednesday actually, I'm going to be at the Hope Global Small Business Development Workshop from 6 p.m. to 8 p.m. Also on the 2nd, I'm going to be at the Tuesday Buckhead Tip Club, 7:30 a.m. Y'all, that's people serious when they up 7:30 in the morning talking about their business, honey. And then on the 3rd, Thursday, August the 3rd, I'm going to be be at the Black-Owned Business Roundtable in East Point at 6:30 p.m. On Saturday, August 5th, I'm going to be at Black Business Saturdays on Cascade Road from 12 p.m. to 6 p.m. On Thursday, August 10th, I'm going to be at Vision to Wealth at the Doubletree Buckhead. But then on the 8th, I'm going to be having an event in the Atlantic Station area. You're going to have to register and sign up to learn about that. As I said before, August 12th and 13th, I'm going to be in Charlotte, North Carolina. On Thursday, the 17th, I'm going to be at the Buckhead Branch Library. And on Thursday, the 31st, I'm going to be again at the Buckhead Branch Library. September 1st, I'm going to be in Houston. I'm going to be hanging out with my iMarkets Live family at our regional event in Houston. That's going to be a whole lot of fun. Let me tell y'all something. Tickets are $144 round trip, so get them now, all right? Plane tickets. $144 round trip, so hurry up and jump on that, all right? If you need a place to stay, I don't know what to tell you. So listen, so the other thing that I want to discuss about this whole mortgage situation.
Yes.
Or not discuss, but actually ask. So I have a personal situation, y'all. I'm about to get some personal counseling up in here. Hope y'all don't mind. So I anticipate a situation where a certain someone who shall remain nameless she's probably going to leave owing on her property.
Okay.
What happens if I have an insurance policy? Am I automatically obligated to pay her mortgage? Like, how does that work?
No, you're not obligated to pay the mortgage off. You could definitely just get the money, and it puts you in a position. See, the mortgage company, as long as they could get the monthly mortgage payment, they don't care what you do. So if you're in a position to make the monthly mortgage payment until you decide what you want to do with the house, if you want to sell it, rent it out, whatever, you decide. But when you don't have the money to make that decision is the problem.
So, okay, so talk to me about that. If you don't have the money to make that decision, do they just come and snatch the house up? Is that what you're saying?
Well, I mean, if you can't pay the mortgage, what you want them to do? They will snatch the house. It will be foreclosed, right? That's what they do. So that's what the banks do. That's why they. It's a
But mama just
business.
died. What I'm supposed to do? Daddy just died. I don't
Well, you know what they'll say to you,
what?
ma'am. I'm so sorry. I feel you, but you know what? This isn't personal. It's just business. It's the bank.
Wow. Wow. They ain't gonna have no sympathy for a sister, huh?
No.
Man. And so, okay. So my parents have not interest only, a reverse mortgage.
Okay.
And not like in real life. I'm just giving you a
Right. Right.
So the parents have a reverse mortgage, and that time has come. The reaper is writing their life, and it's over for them.
Right.
That was kind of morbid. My friend is in here like, oh my God, she collected her pearls, y'all. So anyway, it's their time.
Yes.
And as their heirs, am I obligated to pay their mortgage? What happens in the case of someone who passes away and they're in a reverse mortgage situation?
I
know
mean,
that
same thing.
asked a similar question. Huh?
Same thing. They're gonna the bank will have to take that property. Now here's the thing, folks. I mean, you still got time to be able to sell that property, and you're gonna be able to sell it. First of all, you're gonna be able to get it from the bank at a discounted rate, because one, remember, they only give your parents 50% of the equity in the house, so there's still some equity in that property. So if you all could get together as a group, I mean, or bring, even if the family members, now here's something. Just because your family members might not have the money to do it, but you have friends, you have church members, you have people, business people that you know that you could bring in. I mean, bring in somebody that you know and say, listen, here's a business proposition for you. Here's something we can do together. We want to put you as the lien holder, or whatever it is. Bring that person in to help you, because if not, an investor that got money will come in and snatch it up and take it. So why not work with someone? See, the problem with our folks is the fact that they don't want to work with each other. I mean, find someone that you can trust. Now, just because they're black don't mean you can trust them either. You
Yeah.
know, you got to
Okay.
find someone you trust that can do something that can help you, not just anyone. You know, or even if they're not black, there's someone outside of your race or whatever that you can trust. That you say, okay, this person, I've been knowing them for a long time. Here's a business proposition. We got this property here that's worth this amount. We need to be able to buy this property. Now, for whatever reason, our credit is jacked up. It's bad. But can you come in and buy it for us? And you be the lien holder. We're gonna pay the mortgage because guess what? If I see that kind of a deal and we work it out, and you are gonna give me, I mean, because guess what? I'm gonna want to get a nice amount out of it. I'd rather get 50% of it than you'll get, then you get zero. Because at the end of the day, the investor that's coming in, he wants to benefit too. So when you propose, you go to somebody like that and say, listen, we want to give you 50% of this equity, and we'll keep 50 because right now we getting zero. Because if this property we lose it, we ain't getting no money. So we rather have you come in and buy it for us, and we'll split it with you half and half. I'll do
So
that deal all
let me
day.
ask you. So I have a question from the interweb.
Hmm.
So Royal Patness wants to know what about underwater properties? Do you hold on to it or what? That's a question. And I'm looking in the Facebook Live, and I know there's this pimple on the end of my nose that won't let me be great. Y'all just ignore that, okay? Royal Royal wants to know what about underwater properties? Do you hold on to it or what? How do you handle a situation where you have a property that is undervalued?
So I'll give an example of my house. Because I bought my house when the market was doing whatever it's doing. Everybody was buying. I bought my house high. Paid $600,000 for it. The house that is not worth that. So right now it's underwater. So, but what you do is, but I was going to live in the house anyway, regardless. So I was able to take advantage of the opportunity that the government presented, where you could do a loan mod or whatever it is, and I got that done back then. So my payment got dropped, and I was able to keep my property the way I needed to keep it and keep making my monthly mortgage payment, which was reduced tremendously. And I was okay with that because I was going to live in there anyway. Now,
Right.
I've seen people walk away from their homes. And they mess up their credit, whatever. If you have to, if that's the decision you have to make, you got to do what you got to do. If you don't have any other option, you know. But the question is, even though your house is on the water, are you still able to make that monthly mortgage payment? That's the question. If you're gonna struggle making that monthly mortgage payment, then do what you gotta do. But again, you need to sit down with an expert and set up a meeting so they could help you with that. Somebody that understands it, that is not just trying to, get money off of you. Just sit down with someone and have them walk you through the scenario because everybody's situation is different. There's a lot of different ways to address and deal with that, but we have to get the full picture.
So let me ask you a question. Is it I know that you're not a mortgage expert and I know that you refer people to mortgage experts, but just based on your knowledge, is it better to refi and pull equity out or would it be better to use like a home equity line of credit? I guess it would depend on.
No, 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 don't do that whole HELOC. That's the worst thing you want to do to yourself. Refi, take that money out. Don't do an HELOC.
Okay.
HELOC is first of all, remember HELOC, the bank still has power. They have control. They could call that loan anytime. I know people that have lost their money doing that home equity line of credit.
Wow. So no HELOC.
Nah, don't do
No.
that. Put that equity out if you can. Just put your equity out. Just put your
So
equity out, and it's all you're doing is refinancing that property and doing cash out, and they'll give you the maximum you could get, and then you
so
you finance it for another long term. That's all. Yeah.
so I got my cash out. I got my cash out money. I'm gonna come to you. And
Yes.
I know I asked this question earlier, but honestly, I felt like I didn't get a real answer.
No.
I felt like I didn't get the real, because I was having a WWDD moment. What the hell are you gonna tell me to do with my money?
Once you have that money, come on, and we'll talk about it.
Oh, see. Oh God.
But I promise you, wherever we're gonna put it is gonna be
Okay.
is gonna be beneficial to you, 100% guaranteed.
Man, okay, y'all. Douglas acting all coy in here today. I was trying to get y'all some answers. He ain't trying to hear it. He is
Let them
not.
call me, man. It's
I
just.
did. I told him to
But you know
call
what it
you.
is? At the end of the day, because there's a lot of information I just cannot give on online like that because everybody's situation is different. We got to see other ways that they're throwing money away. So just we just got to sit down and do an actual financial planning because I like to teach people stuff. I want you to be educated. I want you to be empowered. I don't just want to say, hey, here's the product to dump your money in. You need to know what product it is. You need to know how it works. I'm not your
No, you're
cookie cutter
absolutely right.
financial guy. Huh?
Yeah, you're absolutely right. And which is partially right because people be doing what they do, and so I even have some reasons why I'm not revealing all of the information about my upcoming appearance dates because y'all be doing the most out there. But I do understand that sometimes people have this idea that they could just use the information that you're giving, on the show, and they can do it themselves,
Right.
and they end up in a conundrum because there are other parts and pieces to the puzzle that, depending on their situation, you have to guide them in a particular direction.
And you have to educate. They need to learn. It's like if I'm going to tell you to go play golf, and I said I'm going to give you two things to play with. I'm going to give you the golf club of the best golf player in the world to use. I'm going to give you his ability. Which one do you want? You want
I
his
want the ability.
exactly. So when you're going to a financial advisor's office and all he wants to sell you is a product, that's a golf club. He just wants to sell you a product. Here, go ahead and take this CD, this stock, this mutual fund, this annuity, this investment. But they're not taking the time to teach you how to use it. So what I do is before I sell you anything, I need to teach you how all the products work so you understand. So now when you decide on the product that you want, man, you're in a better position. You understand. You know how to use it properly. Now you got the
Right.
ability to use the product well.
Nice. Well, listen. Here's what I want to say. Before we go, I want to say to Shael Rory, Louis Artis, Jay Prey, Andre Schuler, Lisa Gill, Marianne Nettles, Jay Noetic, Antoinette, Ross, Kale May, Adonia Roberts. Thank you all so much.
Yeah,
Calvin Maddox for logging on, tuning in, and holding your girls down.
that's right.
It's always so good to know
Sylvia's
that I
there
have.
too.
Who you say?
Sylvia Williams.
Oh, Sylvia Williams. Yeah, and yeah. Thank you, Sylvia, for being with me today, hanging out. Enrique, thank you so much for doing what you do on the show. And Douglas, I'm always so thankful for the breath of fresh air that you bring to Rich Girl Radio. It would not be the same without you. Guys, please join me at some of these events, okay? Come get educated. Let me love on you too. I like to hug people. You know what I'm saying? I like to tell you I love you to your face, okay? So come see me. Douglas, please tell us how to get in contact with you because we about to go. They need to know how to get these answers.
Yes, creating generational wealth.info. Get a copy of my book. It's on Amazon. Those criminals. Oh, and 301-343-934. That's my cell phone. You could reach me on that as well.
Wonderbar. And y'all know you can find me every single Sunday right here on Love 860 WAEC Atlanta on your AM dial. You know what? Didn't nobody call me today. That's all right. Y'all ain't right. Y'all ain't right. Y'all can't call nobody. It's all good though. Catch up with me on Facebook, IG, Don Von T. Moore. This is your rich black girl, your favorite doctor, saying we are Black History. Bye-bye.
And that's it, folks. Thank you for joining. I appreciate you. I love you. Listen, it's awesome. Thank you for all the likes and share this information, share this video, help your family members out, and let them continue getting educated. More power to you. Have a great rest of your week. Catch you next Sunday. Bye-bye.